President Trump taking a victory lap on tariffs after another benign inflation report, slamming expert economists. On Truth Social, writing, Goldman Sachs made a bad prediction on market repercussions of tariffs and the tariffs themselves. I think David Solomon should get himself a new economist, or maybe just focus on being a DJ and not running a major financial institution. So tariffs haven't been inflationary. We saw that yesterday, and they're bringing in a lot of revenue to this country, $27 billion last month alone, and that's before all the reciprocal tariffs were unleashed on August 1st.
Just on the tariff income, I'd been saying $300 billion, but I think we're going to have to substantially revise that up. So well in excess, 1% of GDP. In terms of the committed investment by private industry, we're well over $10 trillion.
And that was Scott Besson on your show yesterday, Larry.
Thanks for cutting me out of the picture.
Clearly, we did it on purpose. Your take on where we stand. Tariff revenue has been significant. The inflation number yesterday was benign. There hasn't been inflation from tariffs yet, unless it's coming down the pike like Jerome Powell thinks it's going to, pop up like a bomb and explode. But it doesn't look like it.
I agree with President Trump that David Solomon should go back to being a DJ.
Okay.
I really like that very
there.
much. And the Goldman Economics Department has always been a left-wing economics department, for better or worse. I mean, I don't think most of the Goldman people pay any mind to the economics department, but maybe that's a different segment. One of the things that was most interesting is that Treasury Secretary Scott Besson on our show, and then he repeated it this morning on another network, is calling for a 50 basis point cut in the September meeting. And first of all, it's unusual for a Treasury Secretary to call for anything like that. I mean, they don't usually talk about rates. So, second, 50. And then he has said, again, in his interview this morning, at least 150 basis point cutting for a sort of a cycle. And I think that's terrific. And he also told me, Trump is thinking about suing the Fed for their construction problems. And I asked Scott Besson about that. And Scott said he was more worried about changing the foundation of the Fed. That's an interesting code word. He wants a big shakeup at the Fed, all right? Full stop. Very important. Who's going to do that? I don't know. He's interviewing many people. I don't know if you have the clip of it, but he and I were talking at the very end of the interview, and I said, you've done a great job in a year. He said the trade stuff should be over by late October, or he called that aspirational. Yeah. He's got the one big, beautiful bill. He led the charge on that. So I said, all these things, you'd be ready to leave Treasury and go run the Fed. And I got a big smile out of him, which turned into a lot of laughter right at the end of the thing. It was terrific. But when he said foundational, all right, that's very important. He's going to, we spent a little time. He's going to shake up the board. He's going to shake up the district banks, these Federal Reserve banks. Nobody knows what they're doing, except they're spending lots of money. They used to put out good research. Who knows what they're doing? Their appointments have almost all of them have been appointed by Democrats, not Republicans. By the way, the chairman of the Fed has veto power over the district bank president. Of course, they're spending too much money. So I just thought foundational was very interesting, and 50 basis points and 150 basis points. You're seeing an aggressive Scott Besson. I'm glad of it. I think it's high time they did that.
Okay, so the data so far would indicate that Jerome Powell has gotten it wrong. Goldman Sachs has gotten it wrong, Kenny. The crazy liberals who were expecting inflation to, put everybody out of business have gotten it wrong. Oh, by the way, they zipped their mouths when inflation was at 9% under Joe Biden. That wasn't a problem at that time. Right. So, we're living sort of in a world where the narrative doesn't match the reality of what's actually happening. It's hard to grasp that.
But it is hard to grasp it because, to your point, it doesn't match the reality. The market and the economy are very robust. You can see it. The labor market, okay, is it softening a little bit? Might be, but it's certainly not collapsing the way that they would like to tell you. Do we deserve a rate cut? We're going to get one. I think 50 basis points is right. I think the fact that he said that on your show yesterday is kind of planting the seed that that's what the market should begin to expect, is a 50 basis point cut.
And they're sending in, look, they're sending in Steve Myron.
Right.
He's the CEA chair. Okay, smart guy. But they're sending him in. I'm not going to say he has his instructions. He's coming on our show. He's my lead this evening on the show. But I think Myron will push for it. I think Waller and Mickey Bowman will not object to 50, all right? They may help him out. There's a couple other people that were appointed by Biden who are making noises that they think it's time to cut. Kenny, I don't think that, we're not going into a labor market recession.
No, I don't think so.
But I think Waller is right. If you look at private payrolls, you're at stall speed. You're at stall. If you take out it's not just government spending, government payrolls, but what we call government adjacent, the social spending on healthcare and stuff like that, what's left ain't much.
Right.
And that's part of this story. The one big beautiful bill hasn't kicked in yet. I mean, we need to get it kicking in as fast as possible, the IRS and so forth, and start building those factories. But I do think there's weakness in the economy. You're still in a housing recession. So I'm saying that adds to the inflation pictures, and they need to be more aggressive.
Does it, can I throw just maybe a complicator, maybe not, but you look at the latest inflation report, Larry, and the biggest drivers of inflation were not tariff-related things, right? Airfares, dental care, auto insurance, medical care, et cetera.
And shelter. The whole bloody shelter thing.
But can I ask a question about that? Because on the one hand, you could say, well, look, so tariffs aren't driving inflation. Everybody thought they would. They weren't. That's good. On the other hand, though, you could say if it's non-tariff things driving the inflation we have right now, do you get concerned then that if you do pile on more tariff-related prices, that becomes a reason not to cut? That becomes kind of the spooking inflation problem, Larry.
Well, you can't take your eye off all that. So to some extent, I agree. I'm not terribly worried. I'm looking here. Let's go to the market. What is the market saying about inflation? So we have to go to the break-evens, right? All the Treasury break-evens. So the 2-year TIPS implied inflation is 259 as of yesterday. I don't know where it is this morning. The 10-year is 239. So that's pretty low. I think that's pretty good. Now, these are CPI based. You're compensated for the CPI. And to be honest with you, I would take out the entire shelter business from the CPI. It's a lagging, and rents are falling across the country, for heaven's sakes. Home prices are starting to fall in many areas of the country. They can't count the stuff because the surveys are so bad. We learned that from the jobs part. Yeah. So at the moment, I just don't think that's a problem. I think the Fed should do its job, and they should drop it down at least 150 basis points, and they should start right away in September. I don't think there's much. You can always raise rates. Okay. Yeah. One last point, which no one believes in anymore, but I'm very old-fashioned. I'm a dinosaur. I'm a Tyrannosaurus Rex. But Milton Friedman the late, great Milton Friedman was a friend and mentor of mine. I still track him, too. It ain't growing. It's like 4% year on year. 4 or 5 years ago, it was growing at 30%. What did we got? 9% inflation, accumulating to 20%. You can't use every jiggle in the money supply, but if it's down around 4%, if you look at a chart, it just collapses. I just don't see the issue right now.
Let me ask you a question. If you think he's going to cut 50 in September, do you think he cuts only another 25 by the end of the year sometime in November, December, or do you think he goes beyond 75?
I think Jay Powell is a lame duck.
Okay.
Okay. So lame ducks, they can still quack, but they can't get around like they used to. So I think the center of gravity at the Federal Reserve Board is completely changed, putting Steve Myron in now. I think they're going to cut rates a lot more than folks think, and a lot more than the futures market thinks. That's what I think.
This year?
This year.
Well, during his comments
2025
in the last hour, the live comments that Trump was making, he had called for a 300 basis point cut. Now he's saying he wants 4 points lower. So he basically wants interest rates at zero again.
He likes to embellish, as you know. There's a certain amount of irrational exuberance tied up in that. I've been there and done that. But he's making a point.
He's making a point.
Yeah.
Do you want me to wait to talk about tariffs next block? Anybody in the control room?
I'm Dagan. Anything you want to talk? I'm here for you, Dagan.
Do you want me to talk about them now or wait?
I am here for you.
Okay. So I have a theory, and I have not discussed this with you off air or on air. The tariff revenue that's coming in, it is the foundation. And if the Democrats ever get control again, it's bad. But it is in part a value-added tax. It's a consumption tax.
Mm-hmm.
And
sales tax.
yes.
Sales tax.
And Mr. Kudlow, if you look at it like that, it's kind of brilliant because in this way, because we really don't, as a nation, collect any income taxes from the bottom 50% of income taxpayers. We only collect, I have the figures in front of me because I'm a dork, $63 billion is what the bottom 50% of taxpayers paid. It's only 3% of the total income taxes paid. So $63 billion is 3 months of tariff revenue. And it's just incredible. Like, that's the path to helping. I know that the deficit was $291 billion last month, but this is the path to helping close this yawning budget deficit.
Yeah, the answer is yes. Okay, the answer is yes. But to your other point, I thought you were going down in a different lane.
Which was what?
If the Democrats come back into power and they're getting all this tariff money, they'll try to spend it. Okay, and I don't think that is a healthy thing for the economy.
Right.
So, and by the way, that won't get you deficit reduction. So, I'm rooting for another reconciliation bill.
Yes.
That will have significant tax reduction and reform. Okay, kind of a Steve Forbes type argument. Flat tax, lower the rates, broaden the base, get rid of the flotsam and jetsam. We don't simplify the code. I would use that tariff money in part to cut tax rates. Okay, right across the board. I would cut. Now, President has said he's looking at a temporary tax rebate. He said that several times. I don't like rebate.
With the tariff money, that he would give the tariff money back.
That's correct. I don't like temporary anything. I don't think temporary rebates, it doesn't help anybody. It won't even be spent. A lot of it will be saved. Again, I go to Milton Friedman and the income hypothesis. Actually, that's what he won the Nobel Prize for.
The interest on the debt was triple the tariff revenue last month.
Well,
so can we...
We can eat that. We can eat that up by growing the economy faster. The growth element is so important here.
What I was going to say.
Let's have some good tax. Look, let's take the capital gains tax down. The top rate, which is whatever it is now, 37. No, it might be 30. It's 39.6. Get that baby down. Ronald Reagan left Washington. The top rate was 28%. How many brackets were there? 2, 28 and 15. That's the kind of thing we should be aiming for.
Forbes was on our show on Friday. He was saying exactly that.
Of course he has. I mean, Steve and I and Laffer and our whole gang, we've been fighting for this stuff for years. Reagan, it drifted higher. It's not as high as it was, in World War II. But we can do a lot of great, and you know what? People like simplification.
Right.
Remember the postcard we were going to file taxes?
Love that.
On Dick Armey's postcard?
Yes.
Let's go back to that.
I just wanted to finish. What I was going to say is because you introduced this concept of a value-added tax, a consumption tax, a sliver of it, the Democrats would take that and layer it on top, expand it, and this nation will wind up with a VAT and a income tax. And we will look like Germany, this slow-growing monstrosity with social programs, because, again, nobody in D.C. is willing to fix Medicare and Social Security.
But a tariff, you say a tariff is like a sales tax. I agree. But it's not a sales tax. So that's an impediment to the European German model. They have tariffs and VAT taxes and income taxes, okay? So, no, I don't see that as a big deal. Look, the Laffer curve applies to tariffs. You raise the tariff too high, nobody's going to want the product.
Right.
No, but
That it
if France
slows consumption.
If France, say, got rid of its VAT but exempted French-made goods, it's still a VAT.
Yeah, well, that's kind of France, you know. It's a vacation destination, Disney World.
We're charging
They don't really
a
have any
15%
business. They have
VAT on
business in
imports.
France. I don't know. What are they doing?
sell wine.
They have no technology companies. That's
We-
why they all want to tax
Ask
us.
me.
Could go on and on, but
Does
we
it
can't
matter what
right
France
now.
does
Well,
at all in any sphere?
If we're headed in that
Really?
direction, it does.
We'll discuss in the break.
we'll save it for another blog.